What is going on, everyone, and welcome back to Explain the Charts. Today is October 8th, 2025, and we are looking at an absolutely explosive market for Bitcoin, which has just smashed through its previous all-time highs to set a new record above $126,000. There is a ton of news driving this rally, and the charts are telling a fascinating story. So today, we're going to break down the headlines and then dive deep into the technicals to see what could be next for BTCUSD. First, let's talk about the macroeconomic picture because it's the main driver here. We're seeing what many are calling a debasement trade against the US dollar. According to Forbes, Citadel CEO Ken Griffin has issued a serious warning about the dollar's status, noting a 10% collapse this year and substantial asset inflation away from the dollar. This has pushed investors into hard assets like gold, which is nearing $4,000, and Bitcoin, which is being treated as digital gold. This narrative is being supercharged by the Federal Reserve. With inflation still above target, the market is pricing in a 92% chance of another rate cut later this month on October 29th. Lower interest rates typically weaken the dollar and free up capital for risk assets, creating a perfect storm for Bitcoin. On top of that, we're seeing record-breaking institutional interest, with global crypto ETFs attracting a massive $5.95 billion in inflows. U.S. spot Bitcoin ETFs alone saw over $1.18 billion in a single day recently, showing that big money is confidently buying at these levels. Now, let's bring up the daily chart and see how this news translates into price action. As you can see, we have a powerful long-term uptrend that has been in place for over a year. The most significant event right here is the explosive move at the beginning of October, breaking out of the range-bound trading we saw in September. This breakout smashed through the previous all-time high of around $124,466. That old resistance has now become our most critical new support level. Let's zoom in on the last couple of months to really appreciate this recent move. We can see here the sideways to downward chop that dominated late September, where price dipped to the $109,000 level. Many traders were getting bearish here, but the bulls stepped in aggressively, which aligns perfectly with the historical seasonality traders call October. This powerful reversal from the lows shows a clear rejection of lower prices and set the stage for the recent breakout. The candle for October 6th shows the peak of the rally, reaching over $126,200, followed by a slight pullback on October 7th. This is classic price action, a breakout followed by a retest to confirm the previous resistance as new support. The bullish momentum is undeniable, but where do we go from here? Analysts are throwing out some big numbers. Cointelegraph highlights predictions of $140,000 by the end of October, while JP Morgan sees a theoretical upside to $165,000 relative to gold. Some are even calling for $200,000 by the end of the year if this trend continues. The next major overhead resistance identified by analysts is around the $135,000 mark. On the daily chart, since we are in price discovery, these psychological and round numbers will act as the next targets. Now, let's switch to the 1-hour chart to analyze the more recent price action since the breakout. Here we can see the furious rally that took us to the new all-time high, followed by the current consolidation. After peaking above $126,000, the price has retraced and is currently hovering around the $121,400 level. This is healthy profit-taking after such a massive run-up. What we are watching for now is where the price finds its footing. On this hourly time frame, we can identify some key short-term levels. The news reported a revisit to $123,200, which you can see acted as a temporary support before breaking lower. Our current area around $121,400 seems to be finding some buyers. A key psychological and technical support level sits at $120,000. Holding above $120,000 is critical for the bulls in the short term to maintain this upward momentum. If we break below that, the next support could be around the $118,000 level, as noted by CoinDesk. Let's get even more granular and look at the 15-minute chart for the most immediate price action. This chart clearly shows the sharp rejection from the highs near $125,000 on October 7th and the subsequent downtrend to our current levels. We are currently in a tight consolidation pattern right above the $121,000 mark. For day traders, this is the range to watch. A decisive break above the recent consolidation high around $122,500 could signal a move to retest the $124,000 area. Conversely, a break below $121,000 could quickly send us down to test that major $120,000 psychological support. The volume has tapered off, suggesting the market is waiting for its next catalyst. So, let's go back to the daily chart and put it all together. In the long term, the trend is strongly bullish, fueled by powerful macroeconomic tailwinds. The breakout above the previous all-time high is a significant technical confirmation of this bullish trend. Short term, we are experiencing a necessary and healthy correction after a major price surge. Now for our summary of key levels and potential scenarios. Major support rests at the old all-time high around $124,500, but a deeper retest could bring us to the psychological level of $120,000. As long as we hold above $120,000, the structure remains incredibly bullish. A break below that could signal a larger correction towards the $115,000 to $118,000 zone. Immediate resistance is the new high near $126,300. If we can reclaim and hold above that level, the path towards the next major analyst target of $135,000 is clear. My bullish scenario, which I see as about a 70% probability, is that we consolidate between $120,000 and $125,000 before making the next leg up towards $135,000. This would be reinforced by continued dollar weakness and positive ETF flow data. The bearish scenario, with about a 30% probability, involves a failure to hold $120,000. This could be triggered by a surprise strengthening in the dollar or a broader risk-off market event, leading to a deeper correction, potentially back towards $110,000 before buyers step in again. The key event to watch will be the Fed's interest rate decision on October 29th. That's all for today's analysis on Explain the Charts. Remember to like and subscribe for more in-depth chart breakdowns. Please be aware that this is not financial advice. The crypto market is highly volatile, and you should always do your own research and consult with a professional before making any investment decisions.